Stocks sell at silly prices from time to time. It doesn't take a high IQ to figure out that they're cheap, but it does take a temperament that's willing to step up and actually act.
That there, as I'm sure you are all aware, is Mr. Warren Buffett, the 92-year-old oracle of Omaha. He is the CEO of Berkshire Hathaway, one of the largest companies in the world. And the reason most people know his name is because he is the world's best investor. Every year he releases a letter to his shareholders where he details the returns of Berkshire Hathaway stock since he took the reins back in 1965. And get this, from then to now, he's averaged 20.1% per year, while the S&P 500, or the market, has only averaged 10.5%. Berkshire's total return over that time is 3.6 million% versus 30,000% for the S&P 500. So in this video, we're going to take the time to hear some of Warren Buffett's advice that specifically applies to the investing scenario that we all face coming into 2023. So what is that situation? Well, firstly, the market is falling. It fell 20% in 2022. We also have very high inflation, although thankfully that does seem to be trending down, at least currently. And then finally, we have rising interest rates, which are likely going to continue in 2023 based on the Fed reaffirming that they want to get that inflation rate back down to 2% and they won't stop raising rates until they get there. So chuck that all together with the possibility of a decent sized recession throughout the year, and well, for investors, there's a lot to think about. So let's start at the start. The first conundrum: what do we do as rational long-term value investors when the stock market is pretty solidly trending down?
Let's talk a little bit about the fact that the market's down almost 800 points this morning.
Yeah.
Concern for you?
Well, no, that's good for us, actually. I mean, we're a net buyer of stocks over time. And just like being a net buyer of food, I expect to buy food the rest of my life, and I hope that food goes down in price tomorrow. When stocks are down,